Answer me this, all you on-chainians. Are you a bear market bull or are you a bull market bear? Today, we are talking about the leader of all cryptos, the great market mover, the one, the only, Bitcoin, aka King Coin. Why would we focus on the B word on this channel? Well, because all of our investments depend on what the King Coin does. Every move it makes impacts each one of our portfolios. At the end of the day, we are cheering on the King Coin, even if we don't hold any of it, because it dominates our crypto financial world and dictates the mood I'm in today. Bitcoin has been wandering the streets of the Red City, lonely, desolate, hungry for price action. Today, we're going to explore some critical on-chain metrics to try to understand where we are heading from here. We'll start by looking at Litecoin, mostly because there has been a lot of social media discussions taking place about this shitcoin, and its price action is correlated with King Bitcoin. Then, we'll talk about Bitcoin's bottom, the one that has been dubiously spanked by the bears this year. Is this the start of the bear market? Or are we in a historical pattern of false bottoms? The evidence is compelling, so stay tuned for the whole video. We're then going to discuss the recent proposal to adjust the difficulty for miners finding Bitcoin blocks. Making blocks easier to find for miners will improve the hash rate, which has been crashing over these past few weeks. But how does the hash rate impact Bitcoin's price performance? It is a question that many new investors in Bitcoin ask, and we will cover the essentials about hash rate and its correlation with price. Let's get into it. Coming back at you from the East Coast of the United States of America. Happy Independence Day, everybody. Hope you're having a happy, safe, and free weekend. And for all you folks out there across the world who don't know what the 4th of July is, for me, it represents decentralization and the freedom from the centralized banking system. So that's all I'll say about that. So today we're going to jump into a couple things. I just want to breeze through some critical info for you guys. So there's been a lot of talk recently about the Bitcoin hash rate. And, for those of you who might be new to the space, I figured I'd, do a quick video on, and for those of you who've been in the space for a while, I do think that these are some compelling arguments about the correlation between hash rate and price. And, are we at a market bottom, or are we, ready to, for the next leg up in the bull market? So I'm going to start with this article from the Daily Hodl here. So a professional tweeter and crypto analyst named Credible Crypto is predicting that one large cap altcoin could melt faces during the final leg of the bull run this year. With 222,000 Twitter followers, the tweeter tweeted that Litecoin could capitalize on the final momentum of the blast off top. So posting this image down here, He stated that I don't trade fractals, but I do think we will see something similar to what we saw in 2017 on the left. He's talking about this circle right here. Not just for Litecoin, but for much of the old guard. Still think of new all-time highs are in the cards. So, as for the timing of his prediction, he thinks the final rally will begin after some months of consolidation have passed. Credible Crypto also thinks Bitcoin Cash could see all-time highs, and he warns traders not to count on XRP. He went on to say about XRP that it was only one of the worst performing majors in 2017 until it wasn't. In the 30 days following BTC's peak, XRP rallied over 10x, bringing total gains for this cycle to just close to 63,000%, or a 629.9x. He said, don't count on it simply because it has had a slow start. So who knows about XRP, still questionable. Credible Crypto predicts that Bitcoin will move towards 45 to 55,000 if it can break the 35, 38 range. If the King Crypto goes higher than that, Credible says he plans to short Bitcoin and do his best to smash traders' dreams of all-time highs. So, commenting on his strategy, he tweeted, "If we get to 55K, I'll look to head short. I know if we manage to get there, many will be euphoric, calling for all-time highs, when in reality, that region is most likely a place to see midterm rejection." He said, "Have a plan, newbies." So yeah, with the crypto markets lost in Red City, many investors are losing hope, though. And while the smart money is accumulating, others are leaving the markets and running for the hills. But there is some compelling arguments about whether or not the bottom is in. And I started with Litecoin today because just like Credible Crypto, many others in the market believe that another leg of the bull market is fast approaching. And that question is a hot topic on social media sites globally. So this next article, building the case for a potential Bitcoin false bottom. Bitcoin price action has been fickle lately. We all know that, and there's no doubt that we have been moving mostly sideways with a number of unsuccessful breakout attempts. The fact that the 30,000 mark simply won't break, brings back many memories of bear market support at the 6,000 mark, which after a full year finally broke down to an actual real bottom. Analysts are noticing that Bitcoin did something similar to this after the June 2019 peak, settling in around late December, but then sweeping deep down to new lows as we headed into Black Thursday. However, Bitcoin did finally make a move higher. So could these historical patterns, provide us with some clues as to what it's going to do this time? So the last 4 years of the Bitcoin price action has been a roller coaster. As we look at this, right, we see deep lows and really, really high highs. So, a speedy rise from under 1,000 to more than 20,000 capped off the 2017 rally, and sent all of the crypto markets into the troughs of a long bear phase. Price action grinded for months on end, holding the same support, but Bitcoin did, print decreasingly lower highs, a clear signal of a downtrend back then. A lower low was finally formed in late 2018 when Bitcoin broke down to its bear market bottom. And from there, news about a potential Facebook-led cryptocurrency, and I think like the backed cryptocurrency exchange, just drove a really bullish narrative, and with that came prices aiming for $14,000. After the rejection at 14, Bitcoin price action hovered sideways for another several months, forming yet another false bottom. And what we'll start to notice here is a little pattern. And, in early 2020, when the rally finally broke the downtrend, a false bottom gave way, when all the cryptos crashed on Black Thursday. And as we can see from this chart, there is a clear pattern of false bottoms. Bitcoin has once again found itself trading sideways, grinding against support that so far cannot be broken. And for many weeks, we have attempted to break this resistance and have continued to fail. And the bears just, barely more recently got a taste of below 30K. So when this phony bottom holds and a bounce finally follows, the rejection at the false bottom would hypothetically pick up enough momentum to get back through on the next attempt. But as we could see from the RSI on the bottom here, we had the false bottom zone, the bottom zone, the false bottom zone, the bottom zone, and then what this analyst is saying is that that we're at another false bottom right here, trading sideways, similar to what we did in 2019, similar to what we did in 2017. But I do think it's as Ben Cohen on his channel will say, dubious extrapolation. Yeah. So anyway, Bitcoin has the pattern does. I will say this pattern does fit the hallmark of an ABC correction, where the C wave is always lower than the initial correction A wave. B wave is in the opposite direction of the correction and may or may not have happened yet. So basically, nobody knows what the hell is going to happen. But the question of the day is, will Bitcoin take another plunge through support eventually and find a true bear market bottom, or are we just kind of skidding on the runway of another false bottom, ready to bounce back to all-time highs again? What Bitcoin has is a rising trend line, a rising trend line on the same relative strength index, and so basically we're seeing the same trend on the RSI, and we've got a shit ton of institutional investors, plus like 646 banks and Michael Saylor gobbling up all the remaining Bitcoins in circulation. So it's hard for me to imagine that that this is the bottom. I mean, you can see by the trend line on the RSI. I mean, we've hit this false bottom many, many times before and have trended upwards afterwards. So I do think this makes a really good point. But Bitcoin price is in a dangerous spot. There's no doubt about that. We are down more than 50% from local highs, and the bulls have been unable to regain their footing. So each measly attempt to recover has been met by another sell-off and another fall back down to support. Weak-handed bears have been relentlessly fearful, selling at every FUD-filled article. But again, smart money is accumulating. And this buying is actually adding a lot of strength to the markets. And that's exactly what the RSI suggests on the 3-day time frame. So the RSI, as does measure the strength of an asset compared to price action. and can tell us when an asset is either oversold or overbought. And these conditions can lead to a reversal or provide other intel about, price action. If the rising RSI trend line holds as support, the price action might also do the same, meaning that, uh, we could see that long-awaited bounce back into the full bull market game. Every time we have ever touched this trend line in the past, we have seen months of a powerful uptrend. So, Bitcoin still has not reached it into that oversold territory. Um, but finding support at that rising trend line goes all the way back to Black Thursday. So, and we got a bounce there. And so we may see another bounce here. So I do think that this is a good point. And, every time we've ever touched it, we have gone up. So we've gone up here. We touched it here. We went up. And then we're touching it here again. So if history is any indication, either way, up or down, it should yield significant results either way, good or bad. So yeah. So I wanted to touch a little bit today on some of the proposed changes to the hash rate. And as many of the folks who watch this channel know, we've talked about Bitcoin hash rate before, and it has been on a steady decline along with the price of the digital asset. The reason why the hash rate fell from March 9th onward, as many of you guys know, was related to the decrease in miners as a mass exodus of miners left China. So to compensate for all the miners being offline, they figured a clever MacGyver fix to try to fix the situation. And I do think that this may help the price move upward, and I'll explain why. So Bitcoin's mining difficulty is currently around 19.9 trillion. And if the difficulty drops by 27% today on Saturday, it is expected to fall to around 14.5 trillion. So in Bitcoin mining, the network's difficulty is it's the parameter that keeps the average time between Bitcoin blocks consistent, right? So the difficulty parameter is the metric that shows how difficult it is to mine a Bitcoin block, and obviously the higher the difficulty, the more hash power is needed to find a block. So this difficulty level is a security feature that is built into Bitcoin. And as the difficulty keeps rising along with the hash rate, any would-be, attackers would have to spend an enormous amount of resources to breach the system. So it does, sounds like a good time to get into Bitcoin mining, by the way. So, if you have an opportunity to get into mining, it does look like a great day to start today. So the proposed benefits of lowering the difficulty level on the network is to make it easier for miners to find blocks. And after that Bitcoin difficulty change today, the time between blocks should go back to stable hash rate of about 10 minutes on average. So yeah. So multiple Bitcoin. So this whole thing with this hash rate basically started, and I pulled up one of the articles here. So multiple Bitcoin miners in China's Sichuan province were shut down around June 20th, and Bitcoin's hash rate has gone down almost 30% since May. And so, will the price continue to fall further? And what is the correlation between hash rate and Bitcoin price? So that's really what I wanted to aim at today. See if we can find some information more about this, because there are multiple views as to, whether the Bitcoin price follows hash rate or hash rate follows price. So on Friday, June 18th, the Sichuan Energy Bureau and Sichuan Provincial Development and Reform Commission ordered the closure of 26 suspected cryptocurrency mining projects to be closed down by the following Sunday. 48 hours later, Chinese media reported that mining farms in the province had moved quickly to comply, with and to comply with the regulations, and Bitcoin price fell by 6% that day as miners were shutting down their systems. Bitcoin hash rate also began to descend on the same day, sliding down 28% from mid-May to June 20th. To around 102 million terahashes per second. And that's a drop from its normal 200 million terahashes that we had back in April at the peak here. So, so does the price follow hash rate, or does hash rate follow price? So, the Bitcoin's network hash rate is the speed at which miners are able to perform the proof of work calculations per second. The higher the hash rate, the more blocks are being mined, which increases the chance an individual miner has to solve the block reward puzzle and receive the newly minted Bitcoin. So the new proposal that's taking place today, that's launching today, will make it much easier to, find those blocks, and it will then improve the hash rate. So, historically speaking, high hash rate is a general indication of a healthy Bitcoin mining environment. It means a growing number of miners are using the most efficient mining hardware that they can afford and competing with each other, to process transactions and to solve block reward puzzles. This proof of work makes the Bitcoin blockchain secure, immutable, and successful, right? It means what it's made it so successful thus far. So from an investor's point of view, the hash rate is it's an interesting metric to follow, as it shows that miners are investing and deploying new equipment, possibly in anticipation of a rising Bitcoin price. So there are two theories regarding the correlation between hash rate and price. Bitcoin advocate and media personality Max Kaiser, he believes that Bitcoin price follows the hash rate. In a tweet on July 8th, 2020, he stated that the constant 10-minute emission schedule of Bitcoin is the lure that will always attract miners, even acting irrationally. That pushes up hash rate with price following. So according to Maxi Boy, the hash rate metric offers wider macro insight and is a measure of Bitcoin adoption. And as a good maximalist would say, it increases disillusion with the financial system. So so there is an opposing view to this. So Christopher Bendixson, head of research at digital asset management company called CoinShares, believes that Bitcoin hash rate follows price. In a 2018 blog post, it was titled An Honest Explanation of Price, Hash Rate and Bitcoin Mining Network Dynamics. So in this article, Bendixson argues that there is a lag between price increases and hash rates, as miners need to order and install new, more efficient mining equipment as the block rewards become more lucrative. and as the Bitcoin price also increases. So Bendixson explains that this is the reason why hash rate, the increases in hash rate lag a little bit behind the increase in price. So he goes on to say that hash rate follows the price because miners are paid in Bitcoin while incurring local currency costs. He says that this means that increasing the hash rate during a non-profitable mining environment would not make economic sense for the miner. So basically, a higher Bitcoin price means more profit is earned for every coin that is mined. This suggests the pickup in hash rate is expected because the rising value of Bitcoin price. So miners may be expanding their operations in order to make the most of their ongoing higher prices. So as long as that price maintains momentum, the hash rate will likely stay high. So as you can see, if we follow this chain of thought, it makes sense to assume that there is also negative price pressure being created as part of this feedback loop. And so what I mean is that, even though they're increasing the hash rate by making the puzzles easier, um, miners have, have to operate marginal businesses, meaning that, they have to sell a significant portion of their mined Bitcoins to pay for expenses. Miners are therefore creating constant downward selling pressure on the price. So, if there weren't investors buying, the price would decline because, miners need to sell to stay in business. So yeah, this is why that, during periods of market bullishness, uh, when the demand to buy Bitcoin is driven by, social media and media hype, the buying pressure exceeds the miner's sell pressure and the price rises anyway. Uh, when this, cycle finally ends and the markets enter into a period of bearishness, miner selling amplifies investor selling, and it just pushes us deeper into a sea of red. So yeah, either way, investors keep an eye on the hash rate. I mean, it's an important metric to understand, especially in a bull market when we're in a bearish trend. Um, Especially for all of us chainiacs out there, right? I mean, the truth is that we will likely need to wait another 10 years uh, before we fully understand, the relationship between hash rate and price, because we just don't have enough data right now to accurately analyze the correlation between the information. So, but what is clear, though, is that there is a relationship that exists between these two metrics. And investors need to be aware of this relationship and keep their eye on it. For example, if the hash rate is going to rise because the process of identifying blocks is going to get easier, then the price of Bitcoin, may just continue to rise alongside it. And this could mean that miners are anticipating that the rally that they're anticipating the rally is going to continue, and will be mining as many coins as they can to take advantage of those higher prices. So, or this intervention on hash rate could not be enough to compensate for the loss of miners in China. I mean, that is possible. So, those traveling Wilburys who are crossing the border with their Ledger Nanos filled with Bitcoin, heading for the safe refuge on the beaches of Miami. It's going to take them some time to set up their equipment. And but yeah, so my prediction is that the hash rate is going to substantially improve the Bitcoin price, and the blazing bull market will be back in full swing in no time. So keep an eye on this, and this is happening today, over the 4th of July weekend. So prepare for some fireworks. Puzzles are getting the identifying of blocks is going to get easier by 27%. I don't know what that will translate into as far as like an increase in hash rate, but uh, hopefully it's substantial, because we got a long way back to the top. So yes, I'm not even going to get into the charts today, because there's really not a whole lot to look at. We're just trending sideways. It's the same as it was yesterday. So everybody, just be safe out there. Have a great weekend, and keep buying. Peace out.